This is a lecture video for 15.3 for Accounting 1. We are going to talk about adjusting accumulated depreciation. So we have two learning objectives. You need to be able to calculate depreciation expense using the straight line method, and then you also need to be able to adjust accumulated depreciation. So most businesses are going to have different categories of assets in their operations. We're going to talk about two specific types, current assets and plant assets. Current assets are going to be cash and any other asset that we expect to be exchanged for cash or consumed within a year. Okay, so a current asset is cash or any other asset that is expected to be turned into cash or consumed within a year. Plant assets are going to be our physical assets that we're going to use for a number of years in the operation of a business. So we're going to hold on to those for longer than 1 year. So when we talk about our plant assets, we're going to have depreciation for those plant assets. Depreciation is a loss in the usefulness of a plant asset as a result of wear or obsolescence. So when we think of obsolescence, think of something being obsolete. When we mean that it's no longer usable. Okay, so wear or no longer usable. What really helps me think about depreciation is I think about a brand new car. Okay, so let's say that I'm going to buy a brand new 2020 car. When I want to sell it next year in 2021, is that car going to be worth the same amount of money? No, because there's going to be wear on it and it's older. So it's going to depreciate in value. Okay? To match revenue with the expenses used to earn the revenue, the cost of a plant asset must be expensed over the asset's useful life. So we want to make sure that depreciation is an expense, and we want to make sure that we are recording that expense during the same fiscal period that we are earning revenue from that asset. Okay? Depreciation expense is the portion of a plant asset's cost that is transferred to an expense account in each fiscal period during that asset's useful life. So there are three factors that we're going to look at when we're figuring out our depreciation for a plant asset. The three things are the original cost of that plant asset, the salvage value of that plant asset. So what they mean by salvage value is when I plan on using it till I can't use it anymore, how much do I think I could get rid of it for? What amount of money do I think it would be worth? And then the useful life. The useful life is how long do I think that I'm going to be using that plant asset? Now, the original cost of a plant asset needs to include all costs that we paid for to make that asset usable. So if we have to pay extra for delivery of that plant asset, or if we have to pay installation costs so that we can use that plant asset, those things are also going to be calculated into the original cost of that plant asset because I needed to pay for those things to make that plant asset usable. Here's where we're going to talk about salvage value. So salvage value is an estimate of the amount that will be received for an asset at the time of its disposal. So notice that they say too that sometimes salvage value could be referred to as residual value or scrap value. Salvage value cannot be known. It's not like we're going to know, okay, when we're done with this plant asset, we're going to get $20 for it. We really have no certainty in that salvage value, so this has to be an estimate that we're going to come up with. Same thing really with our useful life. Useful life is the period of time over which an asset contributes to the earnings of a business. So how long we're going to be using that plant asset in the business. This again is not something that we're going to know for sure. This is going to be an estimated number. So the total amount of depreciation expense is distributed over that estimated useful life of a plant asset. Now, there are two factors that are going to affect the useful life of a plant asset: the physical depreciation and also the functional depreciation. So we're going to talk first about the straight line depreciation method. So this is recording an equal amount of depreciation expense for a plant asset in each year of its useful life. Here's how we're going to figure it out. Remember, it said that we need to know three factors when we're doing depreciation. We need to know the original cost, we need to know the salvage value, and we need to know the useful life. So first step for our straight line method is we're going to take the original cost of the asset and we're going to subtract from it the salvage value. Remember, salvage value is going to be an estimated value. So in this example, our original cost was $2,500. We estimated our salvage value to be $500. So that means over the time period that we own this plant asset, we are estimating that it will depreciate $2,000. Okay, so really this is saying that we're estimating over the time that we own it, it's going to depreciate, it's going to lower in value by $2,000. Okay, then we're going to take that estimated total depreciation expense and we're going to divide it by the years of estimated useful life. So we figured out how long we are estimating we will own it or use it. Okay, so we're going to take that depreciation value, $2,000, divided by here we're estimating the useful life will be 5 years. 2,000 divided by 5 is $400 of annual depreciation expense each year. So over the 5 years that we owned this plant asset, we are estimating that it's going to depreciate in value, it's going to lower in value by $400 a year. Accumulated depreciation is the total amount of depreciation expense that has been recorded since the purchase of a plant asset. So every year, we're going to continue to add to our accumulated depreciation. So here they're showing us year 2. When we see this 20x2, we can look at that as year 2. We're going to take year 2's accumulated depreciation, and then we're going to add to it year 3's depreciation to then get year 3's accumulated. So it's just this running total of our depreciation. So after year 2, we had $800 of accumulated depreciation. Year 3, that plant asset depreciated by another $400. We're adding these two numbers together. After year 3, our accumulated depreciation is now $1,200. To figure out the book value of a plant asset, then we're going to take the original cost of the plant asset and we're going to subtract that accumulated depreciation that we just figured out. So original cost minus the accumulated depreciation will give us our ending book value. So we're looking at the end of year 3. We're going to take our original cost, which was $2,500. We figured out our accumulated depreciation after year 3 to be $1,200, so we're going to subtract these two numbers. So at the end of year 3 then, that tells us the book value of our plant asset is $1,300. So even though we paid $2,500 for this plant asset, after year 3, this plant asset is only worth $1,300. Now we're going to look at journalizing that adjusting entry for accumulated depreciation. So here they're showing us our office equipment, our depreciation expense for office equipment, and our accumulated depreciation, and then they're also showing us our store equipment. One thing that I want you guys to pay attention to is look at how this office equipment and look at how store equipment, nothing is happening to those accounts. So even though those assets are depreciating in value, We are not lowering the value of our office equipment or our store equipment yet. We will be doing that later on, but not right now. When we're looking at our depreciation, we're going to keep that separate. So that's why we have our debit to our depreciation expense, and we have our credit to accumulated depreciation. Again, same thing down here with our store equipment. So we're going to keep that depreciation separate so that we can keep track of this depreciation. So here's what it would look like in our general journal. Now remember, this is an adjusting entry, or these two are adjusting entries. That's why we don't have document numbers here, because we would have a label up at the top saying adjusting entries. Okay, so we're debiting depreciation expense, and we are crediting our accumulated depreciation for both our office equipment and our store equipment. The thing that helps me remember this is, remember, we're going to debit expense accounts. So if I were to get these two mixed up, just make sure that you're looking at debiting your expense account. Okay, so debit depreciation expense, credit accumulated depreciation. All right, I do want you to try to answer these, so you might want to pause your video while you're reading these questions. Number one, what are two categories of assets? Now, there's different categories of assets that businesses will use, but we're looking at our two main categories that we are going to be using. The two categories that we'll use is current assets and plant assets. Before I want to move on, I want you to see if you can answer this. What's the difference between current and plant assets? Hopefully you are remembering current assets are any assets that are cash or assets that are easy to turn into cash or will be used up within a year. Plant assets are those assets that we're going to hold on to for longer than a year. That's why we're dealing with depreciation with plant assets. Number two, what three factors are used to calculate a plant asset's annual depreciation expense? So what are the three things that we need to know to be able to calculate depreciation? We need to know the original cost of the plant asset. We need to have an estimated salvage value, and we also need to be able to have, an estimated useful life for that plant asset. Number three, what plant asset account does not have a contra account for accumulated depreciation? Ooh, this was a good question. We did not go over this. So this would be something that you would need to look at in your book. Land. So when we talk about land does not actually depreciate in value. So we do not worry about that when we are looking at land as a plant asset. How does an adjusting entry for accumulated depreciation affect the related plant asset account? This was a trick question. There is no change to that plant asset account. So this is where I showed you like office equipment and store equipment. When we're doing that adjusting entry for depreciation, nothing happens to those office account or office equipment and store equipment accounts. They stay the same. That was the end then of the lecture. You can now go on to 15.3, work together.